Welcome everyone back to Pete's Investing Updates. We review the weekly progress of some key share market indices and also gold. This gets updated every weekend. In this week's summary, we look at our indices which have a late recovery for the week. So they're doing quite well with the exception of China and gold, and they're still down. So let's get into it. As always, click on the subscribe button, the notification bell, and like the channel to support it. Let's review also our playlists. Again, this is where we review the indices. We publish the indices in this playlist. We also review some blue chip stocks, which is where we put them in this playlist. But also, very importantly, the strategy playlist. That's where you find how we trade in terms of the strategy we use, the average down process, which goes into a bit of detail, but also some money management ideas. As also, don't forget, we're not offering financial advice here. We're not suggesting you buy or trade any of these. We're simply showing you these as an educational series. So don't go jump to conclusions and trade any of these in particular. And again, looking at China and gold is an example of where we could have gone wrong had you held positions. So first, let's go to the results table. And again, we're trading on these indices, the Aussie 200, the US 500, Germany, the FTSE, the China market, and also gold. This shows you the margins required per one contract. And again, we're trading 5 contracts for each of these indices, and I'll show you the charts in a minute. But as you can see there, the margins required for each of them vary. The lowest cost margin required is for gold. So if we're trading 5 contracts of that, we're looking at about $450 odd out of our account to be utilized initially. And then in the ballpark, in the middle of the range, you've got these Aussie, US, and European markets, but also the highest margin requirement is for China. Very volatile. That also accounts for our low profit at the moment. Again, it's very volatile and very speculative, so I would personally not be trading that unless you've got a big bank account, big trading account. I would go for something more middle of the road, such as one of these, the US or the Australian market, or even the FTSE, or even gold, if I was going to trade anything. So again, just my opinion, be careful how much you have in terms of your account before you start trading any of these. Again, these are CFDs. In a chart we're looking at, we're trading a rolling 5-month period, and it looks at the 15-minute chart. This shows the profitability accumulated over the 5 months for each of these respectively, and the drawdown required for each of these, and just calculates out on average these periods divided by 5, which gives you a monthly average of about 2,800 if you traded all of these. Okay, let's get first stuck into the Aussie 200. I want to show you very quickly for each of these. I want to show you 2 things. Number one, the 5-month period. So as you can see here, the Aussie 200 has gone quite nicely. It's been going flat and consolidating in the last couple of weeks since middle of June. Again, we're looking at the 15-minute chart here. But then it's broken above our entry point. We entered back here, 5 contracts. It went sideways for a while, and now it's finally broken above our entry point. So we're making a bit of a profit there. This top chart shows profitability at each of these stages. This is our entry and exit criteria. And again, refer to our strategy playlist, which shows you the simple trading strategy we follow using the CSCI 100. So very simply, we entered back here 5 contracts. When the CSCI 100 moving average 20 broke above 0, these little spikes indicate where each of those have done. So it's broken above 0. So it entered and it's gone sideways and it fell below our profitability for a number of days. And it's finally broken above our profitability level there. This top chart here shows our profitability level. So you can see here our baseline is 100,000. So if we started there trading at that point there, it fell below on a few occasions here, back here, when the price chart had performed that way. But along the way, our profitability was reaped rewards. It went a bit of a downfall there, and it keeps going up. So again, we trade in and out of this, buying and selling according to our average down process. As you can see here, the latest trade, we've got 5 contracts, and it hasn't added to the contracts yet, and it looks like it's broken above the profitability level, so that may close out in the coming days if it continues upwards. Back here, during the whole 5-month period, was the only time it averaged down, and it happened back here. We entered initially 5 contracts here on the 13th of April. Went sideways for a while, profitability fell. It fell far enough, and part of our strategy is it must fall far enough before entering any new contracts, and that's what this little chart up here shows. It basically calculates out what it shows here is, if you look at that value there, it says the overall average high and lows of the last 90 days was about 40 odd points, and we double that. So we say it must fall at least 80 points. That's one criteria. It must fall at least 80 points from our entry level, but also it must meet our entry criteria where it needs to break above the CCI 100 to add an additional 5 contracts, and that's what it's done there. So up until this point, there were 5 contracts entered. Then it entered another 5 contracts there, so we had a total of 10 contracts. You can see their position's 10. We had another 5 contracts for a total of 10. So when it finally closed out, you can see there the profitability. It's a bit hard to see there, but the profitability up there, when it closed out there, was from their baseline of 100,000, it had 1762. And our opening position back here was 752. So you made about $1,000 in those few days of trading for that contract, for those initially 5, then an additional 5 contracts for 10 contracts total. Anyway, that's a very quick summary of the average down process. Please refer to a video, the simple trading strategy and the average down process to get a better understanding. But again, for the last few couple of weeks, this trade has been going sideways and it's finally broken up. Next, we look at the US market. And again, looking at the 5-month period, you can see there it's been doing quite nicely. No average down occurred in that time frame. This also entered the trade back here, 5 contracts, and hasn't added to the trade, and it's gone above our profitability level there. So this may close out in the coming days when it reaches our profitability. And our profitability target, it must break at least the overall 90-day points of that overall average highs and lows of 90 days. It's saying it must go at least 20 points before it closes out. And also the CCI 100 must break below the 0. So it must meet those 2 criteria for it to close out as a profitable trade. Our aim is not to close out at a negative trade or even a flat trade. It must make at least a 20 point, in this case, in this example, it must make at least 20 points or 20 odd points of profit before closing out, plus the CCI breaking below 0. So again, the US market's doing quite nicely. The German market, look at the 5-month period first. Again, it's been doing quite nicely from when we started back here in early March. Went sideways for a number of periods here. As you can see, the nice little profitability levels hit. It went single trades up until this point. We entered 5 contracts there, went sideways for a number of weeks. Then it finally added another 5 contracts there. So we're now actually broken above our profitability. You can see there from when we first entered the trade. Current profit is 13,762, and we ended up starting back here at 11,036. So it made about almost $2,000 in profits already if it closes out today. So that'll see how it performs in the coming days if it closes out, and that should be a nice little trade for us there. Let's look at the FTSE, the English market. Okay, the 5-month period, you can see there it's doing quite nicely over the long period. It's gone flat for the last few weeks, fell quite sharply in the last couple of days. Then it's recovered nicely. So again, all single trades for most of the 5-month period, and it's similar to the German market. It added an average down process back here upon entry on the 18th of June, the initial 5 contracts. And it's added another 5 contracts now back here on the 20th of July. You can see the profitability is currently sitting at 42.90. And it ended up, we bought out initially, we entered the market at 43.88. So it's just a bit below our entry level of profitability. But again, we need to break at least, according to this calculation, about 52 odd points of profit. And plus the CCI must move below the 0 to close out the trade. And currently we're sitting about break even on that trade at the moment. Next we look at China. This is the one that's causing us the biggest heartache in terms of our back testing. Now it did quite nicely back here. It broke above our $100,000 baseline. and it's fallen down slightly. You can see here it had multiple contracts entered before it closed out. That's where it closed out with a nice little profit there. Then it added up another 3 entries, 3 average downs. So we're currently sitting at just below about $10,000 down from our $100,000 baseline. But again, don't forget we're trading 5 contracts here, and each one of these contracts is about, look, what did we say? It was 1,639 margin required per contract, and we're trading 5. So just be careful when you're into these markets, you understand your margin requirements. But as you can see here, over the 5-month period, the Chinese market's been going downwards most of the time, and hence the multiple average downs. Lastly, let's look at gold. Not as bad as the China market, but again, not as much pain either, because our margin requirements on this one are only $90 per margin per contract. So it's had a bit of a roller coaster ride. We're in a positive, at least. We entered the market back here. We entered initial 5 contracts. We've got another 5 contracts there, so we're sitting on currently 10 contracts, but our profitability is still below our entry level, which was back here. So anyway, that's not a huge concern for us, only because of the margin is a low margin requirement. So again, just a summary. Overall, we're doing quite nicely. Be very careful of trading high margin contracts in these indices, because they're going to cause you a bit of pain. And don't forget the drawdown requirements are simply the highest high to the lowest low of profitability. So for example, in the gold instance, let's call it from that high down to that low. That would be our drawdown requirement. So again, don't forget to subscribe to this and click on the subscribe button to get more notifications on this. Playing around with my PowerPoint. And I'll speak to you guys in the coming weeks. Thank you.